Is now the time to sell Palantir? The market is crashing all around us. You might be really scared at this point, right? Palantir hitting new all-time highs almost every day, but is now the time to get out? Let's take a look at it. Now, this is a question from one of our viewers, Mike. Should we sell Palantir before earnings? Let's go through that question real quick, right, Mike? So Palantir has earnings on Monday, August 4th. So looking at Palantir today, we are going to objectively rank Palantir using our OVTLYR Nine framework here. And then we're going to go through lots of questions that you have as well. So every stock needs to start with the market because that's 40% of a stock's move. So first we need to see the trend, the signal, and the breadth of the S&P. So let's pop over into here. Let's look at the S&P. It still has a buy signal. So the S&P still has a buy. So we'll just mark that green for now. Let's go to the chart here, and we can see Palantir has this is the SPY, still has a buy signal, still has a bullish trend, 10/20, price over 50. So it's still bullish. And then lastly, the breadth of the market. Now, this is what's been keeping me out of the market, and I'm going to show you exactly why. We are getting less and less buy signals, meaning more and more sell signals. In fact, we are down to 30.8 as of today when I'm recording this on Friday. We are down to 30.8% of stocks with buy signals, meaning 70% of the market has a sell signal. 70% of the market has sell signals. Not only that, but if you look over here, you can see what this is measuring is how many stocks are in uptrends versus downtrends. And way more stocks are losing their uptrends, way more stocks are gaining downtrends. So breadth is looking really bad. Breadth is looking very, very bearish to me. In fact, this breadth right here is by far the best leading indicator I have ever found. The best way to tell which way the market is actually going to be going soon is this breadth indicator right here. Crazy how good it works. So next, let's look at the stock. So Palantir is in the tech sector. We can see that right there, easy peasy. The tech sector is getting also more bearish on breadth. You can see down here that in fact, let me zoom in just a little bit more, make it a little easier on you. The number of buy signals is down at, I guess it's also at 30% right here in the tech sector. And it's getting more and more downtrends, less and less uptrends. Now, the tech sector as well is getting less and less greedy, more and more fearful. So looking at the tech sector, it's not looking good. The tech sector looks super bad to me. Now let's look at the stock itself. So 70% of the market we've already covered so far. Let's look at the last 30% of the stock itself. It does have a buy signal, but of course, don't take the buy signals alone in a vacuum. You want to see everything together. A buy signal with a 10/20, price over 50, bullish trend. And then as far as fear and greed goes, it's actually getting slightly more greedy. It's still in the fearful category here, but it's getting slightly more greedy. So trend signal, fear and greed right there. Now, any outlier blocks on top of Palantir? No, there's no outlier blocks on top of Palantir. So actually, Palantir is sitting at a weak buy. So you can take that as you may, but let's take a look at it objectively. If I were going into earnings holding Palantir, I wouldn't be holding it. I don't hold through earnings at all. Earnings are such a crapshoot, right? In some stocks, you can see a 15% up move in a single day, like we saw on Meta. And some stocks you can see a 10% down move just as fast, like we've seen all over the place, right? So personally, I don't trade into earnings. Now, let me show you my particular slide for trading into earnings. And that is right. Where's my slide for earnings? Here, leading into earnings. So first, I asked the question to myself, am I already profitable in the trade? Most likely, you're already profitable on Palantir. Just saying, most likely. Does the expected move break the trend line? Now, you have to decide what trend line are you following. Relax, Lucy. What trend line are you following? The 10, the 20, the 50? You need to figure that out yourself. Now, I personally like to follow the 10 period EMA. So what we're going to do now, I have to log into Tradier real quick. I'm going to show you how to calculate the expected move for Palantir. And it's the same way that you can calculate the expected move for any stock running into earnings. Start live trading. So this is a really cool hack. I want you to make sure that you take notes and understand how to do this for the future. So we're going to go to Palantir once this loads up. Come on, this is not good for YouTube. Let's go faster. There we go. All right. So let's look at Palantir, PLTR. Now looking at Palantir, once this loads, okay, you want to go to the expiration that's closest to that earnings point. So because it happens on Monday, the next Friday is the closest one, right? We're not the one before, of course. We want the one after. So this is going to be August 8th expiration. You price out the at the money straddle price. So you hit the ask button on both the at the money call and the ask button on the at the money put. That's going to give you a price, in this case, of 1870. Now, market makers, just like you, understand that the moves at earnings are generally oversized. So you take 1870 and you multiply that by 0.85. So you're taking 85% of the at the money straddle price to get you $15.90. That is your expected move up and your expected move down. So let's look at this here. Are we seeing, how much was that again? I forget already. 1590. If I were to hold this, would the expected move break through my trend line I'm following, right? Of course, you can look at this like, oh my gosh, I can't wait to make $15 a share. Or you can say from a actual professional trader standpoint, okay, that's a ton of risk for me. That is a ton of risk. In fact, that blows through the 10, blows through the 20, and nearly hits a 50-day EMA. Almost the 50-day EMA. That's how much risk we have here, right? It's a 20% top to bottom move, basically. What's going to happen in Palantir? And because that, nobody knows. So for me personally, even though it is set up as a weak buy, I wouldn't hold it into earnings because I follow 99% of the time the 10-period EMA. Now, why the 10-period EMA? Look, this is the best part about Ask Me Anything Fridays is because I can just go down rabbit holes, right? The 10-period EMA is the indicator of the short-term trend. And of course, as we're trading, I don't care about long-term trends, right? I don't want to be stuck in something for months hoping and praying that I make profit. I want to be in and out. In fact, side tangent here, you want to get rich as fast as humanly possible, right? Get rich quick is exactly where you want to be. Now, that sounds like a huge fake guru thing, and I'm sure someone's going to clip that and they're going to try and do an expose. Good, by the way, good luck doing an expose on Chris, because Chris has been on YouTube over 2,000 videos. Chris is as open and transparent as come, and Chris has been doing this since 2009. So good freaking luck doing an expose on me. Second off, looking at this, right? The 10-period EMA is where I want to be, and you want to be to profitability as fast as possible. Now, why do you want to get rich fast? Why do you want to be to profitability as fast as possible? Because then you can enjoy it faster, right? Imagine how much better your life can be if you shortcut the time it takes to make $1 million from 20 years, right? If you make $50,000 a year for 20 years, that's $1 million. If you shorten that down to 10 years, that's $100,000 a year. Hey, you know what? You're making money twice as fast. That's awesome. Now imagine you take that $1 million, that $1 million from 20 years down to 10, down to 5, down to 1. Imagine how much wealthier you will be to make $1 million in 1 year versus $1 million in 20 years, right? It's the same $1 million, but it's the duration and how long it takes you to make it. And then how you can enjoy it, right? Because there's so many more days in between where you're counting those dollars versus how few days in between where you're counting those dollars. Completely different lifestyle, right? So yes, you want to get rich as fast as humanly possible. But looking at this is a lot of risk. For Chris, even with the objective to get rich as fast as humanly possible, I'm not taking this sort of risk. No way. But it's a great question, Mike, and I really, really appreciate you watching live, my friend. All right. Let's see. Batteries included says, on a day like today, immediately post negative news. What's your mindset? What do you look for or do? Or is it business as usual? Dude, the best thing to do, the very best thing to do is come up with a plan, right? This is my plan. All of my plan is all over the internet. You can find it for free, right? And I just follow it. I just follow it to a T, right? I'm definitely not going to act like Warren Buffett, right? Because this is probably the quote that he had this morning, right? Freak the F out, panic sell everything. It's effing over, right? He's probably thinking at that this morning. because I'm sure he doesn't have a plan that he's going to follow, right? Let's see. There's another quote from one of my mentors. Where is it at? I think it's this one. When you evolve to the point of always being patient and only taking quality trades, that means you've decided you're not in it for the action, but to make money. You have sit out power. You never force trades and you're a pro. Now, we just covered a amazing video that Mark put out just a couple days ago. And of course, because it's not the YouTube clickbait, nobody's watching it. But yet that video will give you more money in your pocket, create more generational wealth for you and your family than anything you've ever heard on the internet. And it's free, but most people don't care about that, right? Most people want the short term. This is the casino. Which slot machine should I pull to make the most money? It's just the reality is that most people can't do what we do because they don't have the mindset to do so. Mark in that video talked about how the year he won the US investing championship with a 300 something percent return, 50% of the days he was in cash. Let's rewind that. 50% of the time he didn't see what he wanted. And because he didn't see what he wanted, the only trade to make was holding cash. And he wasn't forcing anything. And he wasn't out there saying, you know what, I got money in my account. I need to go buy something. Let me go put this in, right? My quick thing, my very memorable quote that people love is sit in cash and don't F up. Okay. Sit in cash and don't F up is so true because you can take the opportunity to do anything you want any day. There are unlimited choices in the market every single day. But if you take those choices, you can F up your account. F up your account to where you could have gone from winning the US investing championship because you understood you only have to be invested as often as it takes to find the trades that you want, to saying, I got to be in something. And then in the meantime, you're losing trades, you're working against yourself. And that $1 million that you're trying to get in a single year is now going to take 20 years because you aren't focusing on the plan. You're trying to push an outcome that's not going to happen anyway. Right? There you go. A little trading psychology lesson today. Great question, though. Great question. Wes White says, what changes have you noticed now than when you first started trading? Wes, that is a brilliant question. My biggest thing was taking losses. Probably is for you as well. And not just you, Wes, but everybody watching. My biggest thing was taking losses because I was exactly this situation right here, right? Let's say I bought it. I'm excited and it comes down. And I'm like, you know what? I can't sell it out here. I can't take my loss here. Because what's going to happen is as soon as I sell, it's going to go up without me. But what actually happens is you get caught in a move like this. And this was, in fact, this was Chris over and over and over and over again, right? I'd buy stock. It would go down. I would say, you know what? That's fine. I'll give it another day. It would go down more. That's fine. I'll give it another $1. It'll go down another $1. That's fine. I'll give it another 50 cents. It'll go down another 50 cents. That's fine. It really can't go any lower. So it has to go up from here. It went down lower. This was exactly what happened to Chris over and over and over and over. Now, this probably has happened to you too. If it has, you're normal. If this has happened to you, you are normal. What is abnormal is what it takes to be successful in the markets. 90% of traders lose 90% of their accounts the first 90 days of trading because they act normally. You need to buck that trend. You need to buck that trend. Now, there's several quotes I'll put up here real quick, right? Probably the most handsome guy on the internet said one time, today is the day to take the opportunity to turn your small losses back into cash before they become big losses. Do not let this opportunity pass you by. Not only was he handsome, I mean, incredibly wealthy, amazing hair, and probably the wisest man that you've ever come across. Just joking around. And then to Mark, right? One of my mentors, Mark Minervini, one of the market wizards, says there's no shame in losing money on a stock trade, but to hold on to a loss and let it get bigger and bigger and bigger, or even worse, to buy more, is amateurish and self-destructive. And one of the best traders ever, one of Mark's trading heroes, Paul Tudor Jones, had this plastered on his wall: losers average losers. Don't be a loser. There's no shame in losing trades, but to hold on to it and let it get worse and worse, and even buy more, is amateurish and self-destructive. So that would absolutely be the biggest change for me. Gas trader, what do you think of volume profile trading? And this is something you take into account. I will be 100% transparent with you. I don't look at volume at all. And ironic, because Mark is a big volume guy, but I don't look at volume at all. Not at all. Now, you can look at this chart on Palantir right here, right? And you can say, okay, this was an abnormally large volume bar, and look at it go. That's pretty awesome. Then you can look at this big volume bar, and you can say, okay, clearly everybody's selling off. It has to go down from here. And what happened? It went down slightly and then came back up, right? This giant volume bar right here, oh, it has to go to the moon. What happened? It went basically sideways from here to here. I don't look at volume at all. Literally at all. The only thing that I care about is price. Is price moving up? Is price moving down? That's what matters. That's the only way you're going to get paid. Let's go to the next question. But it was a great question. How do you roll? All right. So this is one of my all-time favorite trading hacks, and that's rolling an option. And let's talk about why and how we roll an option. Go to this slide here, right? Roll up, you will. So when you're in a trade, in fact, I believe Palantir was one. Yes, perfect. Okay, cool. So back in May, I made so much money on Palantir. It was awesome. Back in May, I bought Palantir on May 12th. You can go back to YouTube and see the receipts. I bought it on this day. It moved up so bigly, so hugely the next day, and I rolled it at this point. Now, what happened after that is it started to come down, but that didn't stress me at all, because I had already made my money, and in 5 days, I made 74% on this trade. When I rolled it, I looked, and whenever I put on a trade, I add, let me show you an example of one that's not messed with yet. HIMS. Now, I haven't actually traded this. I'm doing experimentation, keeping notes on here. But whenever I put on a trade, I go up 1 ATR, and average true range is anything that's available, or I shouldn't say anything. It is a tool that you can add to any chart 100% for free, and it'll tell you the volatility of a stock. So let's look at HIMS real quick. Let's look at HIMS as an example. You can see back here, the volatility was very low, around 247. That was the average true range, the average range of the candles over the last 14 periods by default. Over here, you can see this giant spike up. The average true range was $6. So it went from around $2 to over $6. So it went 3 times higher in volatility. Because of that, you want to trade 3 times smaller, right? If you bought 100 shares here and 100 shares here, the 100 shares you bought up here, of course, they were super expensive, but also the volatility was that much more elevated. So you really had 3 times as much risk as you did way back here. And as a professional trader, a professional investor, you need to look risk first. Now, the reason that I mention all that is because we then add ATR, the same ATR calculation that we use in the position sizing, and we add that to our chart. We say, okay, if it's moved up this far, it has moved up enough to trigger me to roll my option. So let's look at some HIMS options here. And let's say, for example, just for example, that I owned the 55 strike. Now, the way that I would roll the option, right, is I originally hit the ask button to buy it, okay? So if I originally owned the 55 strike, and then can I roll up for a credit? So I would be selling to close the 55 strike. So I would then press the the bid button, which would basically cancel out the original order. I would then buy closer to the money. So we would start here by clicking ask to own the call option. We would click the bid once we've already owned it, once it's already gone up 1 ATR, and that would close this trade. So it would null and void this one. But as one order, we would move it up to another strike. be it the 60, be it the 61. That's up to you to decide. Okay. But you want to do it for a credit. And in this case, the credit would be, let's see, let's close the 55. Let's open the 60. $3.60 in credit. If you're doing it and it says debit, you have done it wrong. If you've done it wrong, you don't want to do it. So, like I say, as one order, sell to close, buy to open, the same number of contracts, right? That's a great point, right? When you're rolling, you're not trying to roll and double up your position. I've done it and it worked against me so hard that I'm like, never again. I used to do that. So it's basically you're rolling up the position. And when you do, you are taking the coolest thing ever, which is partial profits. So you get to pull profits out of the market right away. You get to use those profits to trade with right away. It frees up capital, which not all that long ago, last month or so, I had rolled up several trades. And then because of those trades, I had enough cash in my account still to go put on new trades, right? So it's compounding right away. And it keeps the original trade alive. Right now, if you try to do this with stock, all you can do is get in, buy more, or sell some, or get out completely, right? With this, you're getting in, you can keep the trade nearly identical to where you put it on. You get partial profits, you get you get more capital to go trade with, and you get to keep it on. It is the coolest hack of all time. And it seems more complicated than it is, but honestly, if you already own the option, it's already profitable, it's already gone up one ATR, and you can do this as many times as you need to roll. We have outliers that have rolled recently a trade 3 or 4 times, and you can actually get to the point where the trade is completely free, 100% risk-free, because you've rolled it enough times where you've taken in enough credit to offset the original purchase price. It is such a cool hack. So that's that question. Now, Georgia asked the question, how do you buy a put? Buy to close? No, for sure not. It's buy to open. So let's say, for example, if you wanted to be bearish in HIMS, and I'm not saying you should do this, I'm saying as example, all you'd have to do is, we talked about buying the ask, hitting the ask button to buy the call. You're still going to buy the ask over here, hit the ask button to buy the put, and you're going to buy to open. Now, it functions exactly the same as a call, but flipped, right? If it goes up in value in a call, if the price of the stock goes up in value, most likely your call option is going up as well. If the price of the stock is going down in value on a put option, your put should grow in value. Now, there's other deltas, there's other factors to consider in that. We're not going to go into that kind of detail, but it's just buy to open exactly as if you would with a buy to open on a call. It's a great question. Batteries included says that he's personally not a fan of backtesting. Lots of shenanigans and bias there. My dude, I would tell you, backtesting is probably the greatest gift that God has given you as a trader, because you can then use the data and prove if your strategy works. Whatever your strategy is, whatever your conceptualization of getting into the market, if you can quantify that and break it down into a set of rules, and if you can do it with math-based rules, even better. But if you can put it in a set of rules, then backtest it, that will prove to you as the trader that what you think can work can work. Or it can prove to you that you think can work doesn't work. Right? Now, you are 100% correct here. Lots of shenanigans and bias. If you are doing it incorrectly, that is what's going to happen. If you're looking at the backtesting as if hindsight's 2020, and you're going to be the guy who goes and finds every single winning trade ever, and it only fits this exactly, right? Of course, you're going to go focus in on what's going to hit your setup, right, with the confirmation bias. But you can't do it like that, right? You have to look at it objectively. You have to say, if X happened, what was the outcome? If Y happened, what was the outcome? And then you can adjust. Then you can figure out what works best for you. But I honestly love backtesting. I am spending hours and hours a day right now backtesting, because backtesting is how you can prove if a strategy does or doesn't work. Let's see. Guillermo asks, what is the least amount of cash to hold in your trading account? Typically, how many positions open do you have at the same time? So for now, I can be in cash for weeks and weeks and weeks. In fact, give me 2 seconds here. Let me log into my my results and I'll show you what those look like. Okay. So these are my results for the year right now. I'm up 21%, not where I wanted to be. I was up closer to 60% at one point and then had a losing streak, right? But I'm still up 21% of the year. I'm not complaining about being up 21%. But you'll see that there are times where Chris does nothing at all. Like basically from January to May, I may have put on 3 trades, the entirety of the first 5 months. And then I made money. And then I did nothing for several weeks. And then I made money. And I did nothing. And then I made money. And then I hit a losing streak, right? That's part of the game. Part of the game. But I'm still up on the year. Okay. Now, then I've been sitting in cash as well. There is no set amount of time that you need to sit in cash. It's really just a function of, is the market set up for your style of trading? If yes, you need to trade. If no, sit in cash and don't F up your account. Okay. Now to the second part of the question is how many different positions are going to be open at the same time? That's super dependent, right? There was a point in time, I believe it was around this time right here where I was 100% in the market. 100%. I had as little as $8 in my account left, because $8 in cash left, because everything else was invested. But then there's times like this where I was only like 40 to 50% invested at that point, right? Now the outcome has no determinacy in how many positions you put on, because any one of those can be a big win, a small win, a break even, or a small loss. Just because you have more trades on doesn't guarantee you're going to have more profits in your account, right? It really doesn't. But you're just looking for as many opportunities as you can. And personally, I think the most that I got to, in fact, I believe I started with 7 when I was 100% in. I rolled several, and then I was able to buy 2 more. So at the most I had on at any one point was 9 positions. That's it. Nuthroption says that he got monkey hammered in SGov today. I am so glad you brought that up. So glad you brought that up, because this is the coolest thing that I have come across in years, and I'm really grateful for it. Now looking at this chart, it's like, what in the wide world of sports is going on in this chart, right? This is SGov. This is where Chris now parks his cash, right? I didn't know about this for years. I only started doing this in May, literally May. Looking at SGov, seeing this chart with this wave pattern here, it's like, what is happening, right? SGov is a ultra short duration T-bills, right? So anything that's 90 days or less. What this ETF does is it goes and buys those T-bills and then pays you daily interest into your account from those T-bills, which is really cool, right? Which is paying over 4% right now. Daily interest into your account. That's why it's growing. And then once a month, and this happens on every stock that pays a dividend, once a month, when the dividend is paid, it goes down by the amount of the dividend. So you didn't get monkey hammered. What you're actually going to get is cash in your account in a few days. It takes 3 or 4 days to settle or whatever it is. But you're going to have the amount of this difference placed in your account as cash. Then you need to go and rebuy SGov. Now, for me personally, I don't like to do that. The number one reason why is market risk, right? This is my cash. I don't want any market risk on my cash. As you can see, the way SGov works is it goes up during the month and then collapses at the end of the month on the first day of the month, because the dividend will be paid. The way you can avoid all market risk in this is by buying it on the first, selling it on the last day of the month. And I sold it on the 30th just because that was when my calendar alert came up. You could sell it on the 31st. You could sell it on the 28th, right? The goal is to capture this move, and it may not be to the penny, but the goal is to capture the entirety of the move, then get out of the way as it resets. Now, the reason that I say reset is you can see right here. Let's draw a horizontal line on the bottom of this candle, right? That was at $100.30. There are periods where it resets lower than 130, like this. There are periods where it resets higher than 130. Right? That is the market risk I will not tolerate. I'm not going to have to tolerate that, because I can buy it at the bottom, I can sell it at the top, and I can do it over and over and over. Now, is this much? No, it's not much, But if we zoom out a little bit, you can see quite a lot can change actually. Because look here, right? Look here. As rates have gone up, you can see how this has grown so much, right? This was down at $100.02. So that floor changed quite a lot. Now, if rates ever do go down, just like as rates went up, this got more expensive. If rates ever go down, I can imagine that SGov will go down in value, right? Maybe closer from $100.30 down to $100.02. So because of that, I eliminate the market risk on it. So you didn't get monkey hammered, my friend. You're actually going to get money in your account in a couple of days. Let's see. Jonathan said, looks like Chris was right again. Trump doing his tariff stuff. Market's not loving it. Sitting in cash is an absolute pleasure. Thanks, Chris, for your advice, as usual. Now, I don't want to be the guy who's like, oh, I'm calling for crashes. Oh, I'm calling for, explosions to the upside, melt ups. That term melt up just annoys me. What I saw, what you can see, what I talked about for the last couple of weeks now is saying, I think we're due for a short-term pullback. And was I right? Yes. Was I right on timing? Yes. How did I know? How did I know? The same way that you can know. The exact same way that you can know. Jump into Outlier, go to market breadth. When you start seeing less and less buy signals come through, that's a big red flag. Combine less and less buy signals means more and more sell signals with the fact that we have less and less stocks hitting new uptrends and more stocks hitting new downtrends. The market is dependent on stocks getting more uptrends. The market is dependent on stocks achieving buy signal status in Outlier because more people will be buying it, right? It is a self-fulfilling prophecy. When more people are buying it, it's exactly this. Let me find my slide for this. And this is why I say you have this data. You have this data, right? This is our market breadth. This is what's happening. How many people are screaming sell versus how many people are screaming buy. At one point in time, so many people were screaming sell that nobody's left to scream sell. So more people start to buy. Hope, optimism, belief, thrill, euphoria. And then we reach a point where so many people are screaming buy, nobody's left to scream buy. And so they start screaming sell. Euphoria, complacency, anxiety, now panic, right? This is the market cycle. This is exactly the truth, the exact truth of what happens in the market. And you can see it play out live. You can see it play out live. Adam says, I really built trust in your methods. Yeah, dude. I haven't been around trading since 2009 without being able to see these kind of things, right? Let's see. That's a great question, Wild Stimpy Norwood. Let me introduce myself. My name is Mr. Random Guy on the Internet. There we go. My name is Christopher Ewell. I've twice been awarded top 100 people in finance. I was mentored by 5 of the market wizards, the best traders of all time. I've been successfully trading since 2009, and this is where outliers like us save time, make money, and start winning with less risk together as a team with our chief analyst, Lucy Dog, who is very, very sleepy today. Very, very sleepy today. So you should go ahead and subscribe to help wake Lucy Dog up. All right, let me take one last question here. Jonathan is up 27% on the year by sitting in cash right now. Exactly. Let me take one last question from the chat. I won't. This won't be our last question. But how in God's name do options work with SGov? I see open interest. Yeah. Don't ever trade options on SGov. that's my answer. How much does it cost to learn how to reduce risk? Well, that's a fantastic question. It won't be the last one, but I could actually teach you how to save time, make money, and start winning with less risk in just 3 easy steps. Step 1 is head over to outlier.com, pick up the annual pass for just 82 cents a day. Step 2, step 1 still. If you're on the monthly plan, click this big red button here to save 64% off. Step 2 is start using the OVTLYR Nine. I show you how to do this on a daily basis. Step 3 is sit back and relax because you just found the easiest way to save time, make money, and start winning with less risk. Vaughn says, have you ever traded futures? Yes. I actually, I tried to day trade with futures. Honestly, it just wasn't for me. I can't remember if I was up money or down money, but it did not fit my personality. And because of that, I couldn't do it. Let's see if there's any other questions. Okay. Zachary has a great question. How much of your plan has discretion in it? If your plan has no discretion on trades, would it be better to be automated? Or is it unautomatable? Unautomatable because of the use of options. So there is a point in the future where Mahesh, our CEO, has clearly said to me, he wants my trading to be as automated as possible. So that is the plan. One of the things I'm pushing for in 4.0 is on the screener to have a OVTLYR Nine button, one click button, everything shows up that would set it for Chris. Then all you have to do is just see if there's options liquidity available. If there is, bada bing, bada boom, good to go. But until we build options into OVTLYR, which is probably not going to happen, it's just going to have to be the one manual step to do. And then, of course, let's hit the like button. All right. I hope this has been useful for you today. I hope this has helped you save time, make money, and start winning with less risk. And if it has, Lucy wants you to click that video over there or that video over there because she's so sleepy. She needs you to click a video to wake her up. Have a fantastic day. We'll talk soon.